Good morning. It's Thursday, the 21st of September, and this is Govindraj Ethiraj coming to you from Mumbai, India's financial capital. Our top stories and themes for the day: the stock markets take a U-turn, fall 800 points, $100 predictions for oil a barrel are here. Contract. What contract, say pilots, as Akasa Air takes battle with fleeing pilots to court. Consumer demand is falling across categories. Rains are one reason. All is forgiven for now. Total France is back with Adani in a new venture.
This is a core report with Govindraj Ethiraj.
And the markets make a U-turn. The first signs of weakness were already there, but the Sensex yesterday fell further by 796 points to end at 66,801, while the Nifty 50 breached the 20,000 mark on the way down to settle at 19,901, down 332 points. The Nifty mid-cap and small-cap indices too dropped about 0.5%. Now, these were the broader numbers. Several triggers could be driving the nervousness in the markets, including, of course, oil, which I'll come to, a rise in US Treasury yields, and selling by portfolio investors, which in itself is not so new. Caution is advised in the Indian stock market, especially in the small and micro-cap segments, as there are potential sources of intermittent volatility, such as the US Federal Reserve's actions, rising commodity prices, that's especially crude oil, uncertain monsoon impact on crop production, upcoming state elections, and soft rural consumer demand. Milind Muchala, executive director at Julius Baer India, quoted by Business Standard, said Julius Baer is a large investment bank and wealth management company. Meanwhile, in other notably, that's commodity markets, Goldman Sachs has rejoined the $100 a barrel oil club, raising its forecast for crude back to triple digits as worldwide demand hit unprecedented levels and OPEC plus supply curves, that's Russia and Saudi Arabia, continue to tighten the market, reported Bloomberg. Prices have risen by more than 30% since mid-June to breach $95 a barrel on Tuesday. However, most of the rally in the vital commodity is behind us, Goldman Sachs said in a note. Pilot was. The year-old Akasa Airlines has run into an unusual problem, fleeing pilots and a court case on them by them following suit. Some 43 of them, that's pilots, are believed to have quit en masse and joined, if reports are to be believed, Air India Express, now owned by the Tatas. Both airlines fly Boeing 737s, the pilots of which are not so easy to find, at least right now, and going by one opinion, who I will come to shortly, anywhere in the world. The larger issue is employment contracts. Akasa Air says the pilots have breached a 6-month notice period and taken off, quite literally. The notice period is long but ideal, most airlines have said, at other points of time. A contract works both ways, of course. Pilots allege that airlines don't really honor contracts when things go wrong with them, and usually leaving them, that's the pilots, hanging high and dry. In their view of the world, dishonoring a contract is quite honorable, particularly if it was not a nice contract to start with and if the airline had breached it too, as they are alleging in the present case. Matters got a little compounded for Akasa Airlines when its lawyer who filed suit in Delhi High Court dramatically announced that the airline was in a state of crisis and might shut down due to the abrupt resignation of these 43 pilots to join rival airlines. The lawyers pleaded with the court to direct the Directorate General of Civil Aviation, or the DGCA, to enforce the mandatory notice period rule for pilots. The notice period, incidentally, is 6 months for co-pilots and 12 months for commanders. Quite obviously, the one line from the lawyer was reported, or rather selectively reported, to suggest that the airline itself had said it was shutting down, which obviously it had not. Nevertheless, this led to much social media agony which would have ruled the day for another day, were it not for another less loyally rift between the two countries of India and Canada ruling the airwaves, which I will come to shortly. And of course, going to court itself is a somewhat unusual and aggressive move by the airline, according to aviation analysts. Now, Vinay Dubey, CEO of Akasa Airline and earlier with Jet Airways in the same position, told employees later yesterday the company was in fine fettle and said Akasa was never more confident about its future and would continue to invest prudently with longer-term financial success in focus. He also wrote that Akasa was generating cash from the first day of its operations, and this meant that the initial funds put in by investors, including the late investor Rakesh Jhunjhunwala, remained secure in our bank account. So what will happen now as things stand is that Akasa will obviously curtail some routes and flights but will continue flying normally elsewhere. till it obviously can get hold of some pilots or presumably poach them back from somewhere else. Now, on to pilots and their view of life, which I can assure you from years of covering aviation on and off can vary from their employers. I reached out to Captain Sam Thomas, a former Jet Airways pilot and now president of the Airline Pilots Association of India, which claims over 600 members and pilots from over 30 airlines, including Akasa Air. I began by asking Captain Thomas what his current position on the matter was.
As far as ALPA's position as the Airline Pilots Association of India that I represent, there are two aspects to this. One is the legal aspect, which is sort of in the realm of 50 shades of grey. Now, what has happened with this 6-month notice period to 1-year notice period has been going on for a while. And there is a history behind this. The contention that you need 6 months to get a pilot ready is not accurate at all. And airlines have joined together to force the hand of DGCA to implement it as CAR. Now, that has been struck down from the 1 year, it has gone down to a 6-month notice period. The facts of the matter, as far as we've been speaking to the Akasa incident with the pilots, is they've very clearly stated that it's the toxic environment that has forced them to leave. And also, these contracts are governed by the Indian Contract Act 1872. If either one of us is in breach, then there is a chance for the other party to leave without any penalty. Now, wherever there is a negative covenant involved in this, it becomes very subjective because what is the cost of training? And at the end of the day, they have gone to another airline. Why hasn't it happened that the pilots of those airlines, which are flying the same, in this case, it's the Air India Express, why wasn't there a reverse flow?
That could happen, but I think the question here is the legal part first. And you're saying that the legal part is tricky, as in it's not very clear, it cannot be enforced?
That's correct. That's correct.
So, in which case, what's the sanctity of this 6-month clause? If you're saying that no pilot anywhere in India will adhere to it?
It's not that they will not adhere to it. People have been adhering to it for a long time because they have no other option. Now, take a case of a brain surgeon in Leelavati Hospital. Does he have to give us 6-month notice? They are far more intelligent than pilots. And now it's a point of these supply and demand kind of scenario. Now, since the law could not help them out with the 6-month notice, the airlines represented themselves to DGCA and forced the hand of DGCA to bring in these irrational contracts. Now, when you go back to the court, again, there have been enough judgments to say that this will not hold. In fact, the DGCA of that time gave a affidavit in court to say that CARs are advisory in nature, which is absolutely wrong, but they have done that anyway. So,
what is a CAR, Captain?
Civil aviation requirement.
Okay, so you're saying that the 6-month is not enforceable and therefore should not be an issue of contention, particularly at a time when a pilot may get other offers. So that's one part of it. The second part is to do with the ethics of such a move. And obviously, when pilots leave en masse in this form, the airline's operations are jeopardized. Isn't that affecting your association or the pilot's long-term career prospects as well?
Well, there has been no study into that. We have asked DGCA through an RTI as to what kind of study have you done wherein pilots have resigned en masse. This is not the first time it's happening. They claim that Kingfisher had a problem, Deccan Airways had a problem. Now, they were not able to put out anything substantive to say that, yes, passengers were affected. Now, cancellation of flights. If 43 pilots of any airline resign, there will be a little bit of schedule disruption. But when we are speaking to the pilots, why would they suddenly decide to leave? If the company is doing well and if everything is all right, why would they leave? What we want the airlines to do is to introspect and figure out other reasons that this is happening. The problem with Akasa was they came post-COVID. And when they came post-COVID, they had offered pilots some very ridiculous salaries. Pilots who were desperate, had no job, had lost their jobs. They were the ones who agreed for it.
So, are there enough pilots in India right now who could be hired, or is there a fundamental shortage of pilots? And we are talking about 737 right now.
Yeah, 737, there is a fundamental shortage of pilots. That is because it's difficult in India to go by the regulations and get the number because there is no number of training institutes. I mean, it's not easy for an Indian to become a pilot. That's because the regulations are so archaic. We are governed by an Indian Aircraft Act 1935 and the DGCA and all these things. We have no sort of easy way to become a pilot. Having said that, pilot shortage right now is worldwide. US is facing one of the biggest shortages of pilots right now. That unless you plan well in advance, this is going to be a perennial problem. And with airlines expanding, the only solution they have right now is to bring in expatriate pilots, which again may happen, may not happen because, like I said, it's a worldwide shortage, not just an Indian shortage.
Right. And just to come back to the point that we started in, you're saying that a legal contract has limited sanctity when it comes to pilots at this point of time. And therefore, airlines, when they hire in future, may not even think of or should not even think of having such a clause in their contract because it's not going to work in any way.
Not entirely. See, the very fact that the plaintiff, that is Akasa, has asked the Delhi High Court to ask DGCA to intervene, that itself shows that they're not on a good wicket right now. What we are trying to say is, let's get a contract that is okay. We don't want the employer to be in trouble. At the same time, we don't want the employee to be in trouble because we faced this firsthand. When Jet Airways closed down, there was a 1-year notice period in force. And we could have had very good offers. It's just that no employer is going to wait for 1 year for you or 6 months for that matter for you. He wants it as of a 3-month maybe or something that is beneficial to both. We don't want the pilots or the employer to be in any kind of trouble with en masse resignations.
When you know that en masse resignations can create trouble for an employer, you're saying that you would discourage your members from doing so?
We are not in a position to do that because then they are going to revert back to us and say that when there was COVID and there was en masse layoff, what did you do for us then? Because neither the employer nor the associations did anything other than take care of their medical or, very emergency kind of medical situations. The solution to this is only to have balanced contracts between the pilots because the pilot side is never mentioned. There are kids who have joined after paying 1 crore and getting 737 endorsement and still paying the bond to the airlines. So when the times were bad for pilots, these airlines used it to make money. Like SpiceJet was a perfect example. Go Air, the perfect example. I know people who have paid 50 to 75 lakhs as bond there and then they shut down. Now what happens to them? So if there's no protection to the employee, why should we bend backwards to protect the employer?
Right. Captain, thank you so much for joining me.
Most welcome. Thank you so much.
The India-Canada battle. A diplomatic battle between Canada and India over the killing of a Sikh leader and a Canadian citizen in Canada is threatening to put a freeze on growing economic ties between the two countries. Trade between the two countries is worth around $9 billion. That's mostly merchandise imports and exports from India to Canada, being at a little over $4 billion each, or less than 1% for India, according to figures from BQ Prime. However, India is the largest source for foreign students in Canada's colleges and universities and has sent over 200,000 of them last year alone, from what I could see. In the markets, the biggest Canadian public pension managers have poured tens of billions of dollars into Indian companies and projects, including renewable energy, infrastructure, and banks. 3 large funds, the Canada Pension Plan Investment Board and pension funds for Quebec workers and Ontario school teachers, have over $32 billion invested in India, Bloomberg News reported. Bloomberg News also said that the White House, that's America, has reacted cautiously, with National Security Council spokesperson Adrienne Watson saying the administration was deeply concerned and called on India to cooperate with the Canada investigation. Meanwhile, the Ministry of External Affairs in India on Wednesday issued an advisory for Indian nationals residing in Canada and those contemplating travel there, asking them to exercise utmost caution. Kirana stores, or the corner stores, slow down on stocking. A few weeks ago, I spoke to Dhairishil Patil, president of the All India Consumer Products Distribution Federation, and he spoke about how inventory levels were rising with dealers as sales were slowing down in Kirana stores across the country. He attributed to people holding back on expenditure and spending and saving more. a feature he said he did not even see during COVID at this level, at least proportionately. Latest numbers from Bizom, a retail intelligence platform and a company that collects data from some 5 million Kirana stores across the country, shows that year-on-year sales for several categories have slowed quite sharply. Also, Kirana stores are not stocking up as much in anticipation of lower sales. Now, year-on-year, commodities are down 24% or a negative 24%, beverages are down 9%, confectionery is down 15%, and personal care is down 19%. Home care is the only segment that has grown smartly at 18%, that's 18% positive year on year. Overall, rural growth is down 17% and urban growth is around 2% or mostly flat. So, what do these figures suggest, particularly in context of overall consumption patterns and consumer behavior numbers nationally? I reached out to Akshay D'Souza, Chief of Growth and Insights at Bizom in Bangalore, and began by asking him how he was reading the current data trends.
One of the things that you have to realize is that we're actually coming up against festival season. So at a store level, we will expect to see a lot of consumer brands actually end up dumping stock because almost everybody of them wants to capture the entire category share on their brand. That's typically a play that happens for consumer brands during festival. You also have Diwali in November. I think you'll see a large piece of that actually go through in late September or early October is where you will see that trend happen. But that being said, other than home care, where essentially you see a lot of products in the need side for consumers itself, there is not much happening otherwise. Now, if you look at it category-wise, beverages has had a difficult year, right? We've had a summer that's largely been piped off because of unseasonal rain. Temperatures have not been the highest. And now you actually compare this versus last year. I don't know if you remember, but last March for beverages was the hottest year. And temperature directly correlates with sales beverages, especially cold beverages. And that's been the impact this year as a overall macroeconomically, what is impacted there. The next thing that is commodities, right? Now, commodities are a mixed bag, really. On the one side, you have branded commodities like edible oils, for example. You're seeing prices have dropped for them over 40% year on year. So I think any demand that we may have got due to drop in prices is going to be inelastic. So overall, volume would have dropped down and will remain down because I'm not sure if you've tracked, but we've also been importing a lot of supply and stock of edible oils so that we maintain stability for this year. I think that has happened pretty recently. So edible oils being lower is understandable and a lot of it is price drop driven is actually kind of been impacted. For the other pieces, I think we will see a pickup. I think we just sort of wait maybe for a month or month and a half. Rain is being slow really in August is possibly also making rural a little tentative is what I feel. If September kind of turns around in terms of rain for volume in the whole sowing season of the Kharif crop, I think kind of comes through. I think that's where I think you will see maybe the turnaround and the festival season boom that kind of can come in place.
Right. So these are obviously year-on-year figures. So if they're relating to the same period or roughly the same period last year, which is again in the run-up to the festival season. But Akshay, what's the larger view on this? I mean, is this reflecting a certain holding back by consumers on purchases? Is it some other, as you said, rain? I mean, what's the macro view on what's going on?
Look, at the moment where we are on this old trend, we'll have to actually see how the rainfall pans out, to be honest, because a lot of the rural economy today, which is agri-dependent and agri-income dependent, will rely heavily on agri-income, which essentially is going to be rainfall driven. Now, the dry spell is not helped, to be honest. I think that's really put a worry. But what I think is going to be positive is that there are definitive measures to control price inflation. And I think that is definitely something that I could see. And I could see that in rice. I could see that in wheat. I can see that in sugar. I can see that in edible oils, tangibly visible. El Nino or no El Nino or that price control mechanism, that control is there. And I think you will see that being in place, which means spends are going to be controllable in this year anyway. If you actually have a good crop, for example, rice 5 year, the acreage has increased, you're probably going to stare down at a yield decreasing because of the rains, right? Because the rice is a very rain-heavy crop again. So again, that also creates a shortfall of revenue overall in the hands of the farmers, right? I think. And finally, you need to have an income to kind of drive consumption at the same time. So I think really September and, I think the next 1 or 2 months is critical from that point of view, especially from a rural standpoint. Urban, I don't see as big a challenge because urban, I'm still seeing it could pick up even more. I think that's the trend seems to be there at the moment.
Right. And Akshay, can you give us a sense on what's your data collection landscape like?
So we essentially have now helping over some 600 odd brands to kind of get secondary orders from over 8 million kiranas. In my analysis, however, I use close to about 5 million of that for analysis purpose, which is part of the numbers that we see. And I think we have other sources which we collect direct data from retailers and so on and so forth. And so it's a pretty big and large landscape that we kind of use, largely secondary orders based.
And between urban and rural, what's the value split?
So I think for our universe that we have put out, urban is still about a third of the overall business that we kind of put out.
In value terms?
In value terms.
So 2/3 is rural for all consumer products in India, in going by your...
Yeah, I didn't speak mainly across categories. Because then product sets which are slightly more urban oriented, like confectionery is slightly more urban oriented than some of the other products.
Right. Shay, thank you so much for joining me.
You're welcome.
Total and Adani are back. Adani Green Energy on Wednesday announced a new joint venture with France's Total Energies to house a 1,050 megawatt green portfolio. Total will invest about $300 million in the deal, said Adani Green. There are already 4 ventures between the two, going by a statement made by Total in February, including Adani Green Energy. Now, this is the first deal announcement between the two companies since a report by Hindenburg Research, a US short seller on Adani Group in January, led to all of Adani's stocks being pounded on the bourses. In February, Total had put out a detailed statement about its transactions with Adani, saying essentially that its investments were undertaken in full compliance with applicable, which is Indian laws, and Total Energy's own internal governance processes. It also pointed out that its investments represented 2.4% or $3 billion at December 31, 2022 levels of the company's capital employed. Total first partnered with Adani in 2018 to develop a joint LNG or liquid natural gas business. At that time, there were 4 ventures: Adani Total Private Limited, Adani Total Gas, Adani Green Energy, and AGEL, that's Adani Green Energy 23. Total Energies will invest $300 million to form a new 50-50 joint venture that will house that 1,050 megawatt portfolio that I just mentioned. It will comprise a mix of already operational 300 megawatt, under construction 500 megawatt, and under development assets 250 megawatts, with a blend of both solar and wind power, said Adani Green. Adani Green's total project portfolio stands at little over 20,000 megawatts. Well, on that energetic note, that's it from me for today. Have a great day ahead. Remember to log on to www.thecore.in, read our newsletter, visit our website, spend some time on it, give us some love. Also, tune in to our podcast, which is a weekday podcast and also now on weekends with a special edition called the Core Report Weekend. This was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter at www.thecore.in. That is www.thecore.in, or follow us on LinkedIn, Twitter, and Facebook as well. Now, we would love your feedback on how we can make business more interesting and relevant to you, including our reporting on India's vibrant manufacturing sector. Write to us at feedback@thecore.in. Thank you for listening.